All right, team. One more panel today, but it's an exciting one. It's about energy, okay? We're going to talk about how blockchain is affecting the energy landscape. So on stage joining me today will be Stephen Leahy, who is the CEO of newly founded Power Finance. We have Mark Smith, the CEO and co-founder of Carbon Country. And this panel will be led by John Sarson, the CEO of Sarson Funds. Please join me in welcoming them to the stage.
Hello and good afternoon.
Last panel of the day.
Thank
Let's
you
light
for
it
that
up.
warm reception.
Right? No low energy. Come on.
Come
we're
on
we're the
in.
last thing holding you back from having fun tonight. Let's make this interesting.
We're almost at drinks.
That's
You
right.
almost made it.
Power, renewables, carbon. This is a website for a new AI robot girlfriend, I think, that we can put her on chain. Document all of the way that you treat her. Everyone needs to be careful. Keep that in mind. It's an immutable permanent record. But let's talk about power. Let's talk about renewables, carbon. I'm with Mark Smith and Stephen Leahy. I've known these gentlemen for a while, two true leaders in our industry and in the space. I'd like to let them give a short introduction of where they've been over the last 5 years that have brought them to these companies, and then we're going to do a deeper dive into their companies and how they're going to leave the world a better place than they found it using blockchain technology and worrying about the environment and sustainability. So Steve, you want to start us off?
I guess I'm first. So hi, everyone. I'm Steve Leahy. Been Boston born, bred, and based for a heck of a long time. Let's go Boston Blockchain Week, Boston Blockchain Association, everything about Boston. So been in the industry since about 2017 or so, consistently working on projects that bring financial products on chain. Worked on a very early proof of stake protocol in the Cosmos ecosystem. Spent 3.5 years heading Circle's capital markets biz dev function. And currently, about 4.5 months ago...
I'm sorry about that. That was a failure.
Seems like it's going pretty well if you look at the public markets. And then recently, about 5 months ago, I co-founded Power Finance. And for us over at Power Finance, we believe that power and electricity is probably the most valuable resource to capital markets valuation out there. Every company out there that's doing well in the world, whether it's AI, data, social, whatever it is, power and electricity is the core resource that all of them need. Yet there's nothing about electricity and power that's on chain at this point in time. And so our thesis is that there's a massive opportunity to bring this most valuable resource on chain in all sorts of different forms, whether it's synthetic dollar, some asset management products, and that's what we focus on at Power Finance. We are bringing electricity on chain.
Thank you. That sounds interesting. We'll dive into that some more. Mark, can you give us some background, please?
Yeah, sure. So the company I founded together with my co-founder is called Carbon Country. And we're trying to do something quite important, I think, for our country and the world, which is basically create a new economic model for smallholder farms. So today, 3% of farms generate 97% of farm income. So if you let that sink in, and you realize that the other 97% of those farms are dying, their owner-operator is average of 58 years old, making $36,000. It's no wonder that the kids want nothing to do with that as that transition is made. And the danger for our country is those farms become residential housing and we lose the ability to feed ourselves. So what we're doing is we're adding agrivoltaics, which is solar above, in our case, regenerative agricultural practices. So we're doing rotational grazing of sheep under our panels, and carbon removal. So we're building the first large-scale biochar facility in the state where we operate, Maryland, as well as pioneering some practices, one called wood vaulting and storage. Where this connects with blockchain and why we're here is because Bitcoin mining, and we believe that agrivoltaics is the future of agriculture.
Say that word again for us.
Agrivoltaics, which is basically solar above farming. So we're not taking land out of production, but we're adding another critical income stream that basically bolsters the whole farming operation and generates, quite frankly, a lot more cash. So we're adding agrivoltaics, and if you believe that agrivoltaics are the future of farming, I believe that the future of renewable energy is both battery storage and Bitcoin mining coupled. So you basically create an ecosystem where you're able to arbitrage peak power prices, non-peak power price, Bitcoin price, and electricity prices to maximize the IRR of your renewable energy assets. And I think what's truly revolutionary about all of this is that the farming sector can actually generate their own collateral and break free from the cycle of boom and bust where the bank comes in, takes the family farm, etc. We're mining in our barn, creating our own Bitcoin, which we're using as collateral to borrow in stables and generate working capital for our farm. And if you think about that applied to rural economies writ large in the farming sector, it really is truly transformational. So we're really excited about to talk about that here today.
I would be remiss, sorry, John. I know I'm not the moderator, but I can't help it with a microphone in my hand. John, tell us a little bit about Sarson Funds, if you would.
Thank you, Steve. Sarson Funds is an asset manager. We've been in business for 8 years. We build niche crypto hedge funds focused on a segment of the market. I see our Web3 PM here, our decentralized AI PM is here. So we try to help investors get that early stage targeted crypto exposure that, that gives us that really good upside during a bull market, which everyone in the room knows we're on the precipice of. I know I don't have to say that. So it's a great time to start moving down market cap. That's what we're doing at Sarson Funds. The disruptors in some of these categories, especially decentralized AI, decentralized compute, power on the grid, carbon credits on the grid, these are going to come in and they're going to be big companies by the end of this cycle. So we like looking at them early. Thank you for that, Steve. I appreciate that. So let's go back to you, Steve. With trading futures on energy is a big business. So are you maintaining that the big players are not interested in blockchain, or what's going to create a niche for a blockchain-based energy trader?
Yeah, so I'll reiterate that to us, we firmly believe that, again, power, which is also equated to electricity, is the most valuable resource, and that is a core component to any of the capital markets growth cases out there. But electricity, as all of us know, we all pay for electricity every single day, both in our businesses and at our home. And very few of us have the ability or capabilities to hedge any of those costs or to make any sort of profit off of the incredible volatility of electricity markets or the incredible increases in prices of electricity in the last year, a couple of years or so. And so for us, the key kind of, I guess I would say, a part of the framework of the career that I've had, whether it's in equities, FX, or crypto, is every single market benefits from digitization and decimalization, meaning make the transaction sizes smaller, make there be more number of transactions out there. And at this point in time, in the power and electricity markets, it's only traded on some of the larger commodity exchanges. Intercontinental Exchange is the primary, a company called Nodal Exchange is the others here in the US. These are large contract sizes. They require a lot of margin to be traded. They are traded effectively via appointment, meaning that they actually have, while the markets are technically open 23 hours and 50 minutes per day, they take a nice little 10-minute nap at a certain point in time. It's effectively a trade by appointment. You and I, as individuals, have a really hard time accessing anything about electricity. We can't hedge, we can't speculate, we can't do anything. So the overriding thesis of what we're doing is bringing electricity on-chain. Our first two products are actually essentially an index for electricity, which again, surprisingly, an electricity index does not exist at this point in time. You can't buy it through your broker, you can't buy it through an FCM, you can't buy it on-chain. So we're building an electricity index with the backing of essentially what's an ETF, though it's offered on-chain. The second product that we're bringing to bear is a synthetic dollar. This ties into my background, having spent time at Circle for about 3.5 years or so. Stablecoin's clearly the big winner when it comes to product market fit for all things digital assets. 90+% of all stables out there are backed by US Treasuries. Even less percent of that are actually yield bearing. But a synthetic dollar, though a little bit complex to operate, adds more features and therefore more functions, therefore more use cases. And so by essentially mimicking a project out there called Athena, by using the electricity markets for generating a delta neutral yield bearing position, we can offer a synthetic dollar. Ultimately, early on the use cases, the world of DeFi is looking for new forms of yield, and we've got something that's completely uncorrelated with treasury markets. So there's the opportunity to speculate there. If you are an underlying user of electricity, all of us are, now you have the opportunity to hedge your future costs of electricity. Ultimately, long term, we think that a synthetic dollar that is generating yield specifically from the electricity markets will be used as form of collateral and payments within the world of electricity trading. So big ambition, we start small, 2 products, an index and a synthetic dollar. That's what we're doing.
That sounds like the perfect place to be. There's certainly a ton of interest on Wall Street about alternative power for these data centers that are very power hungry to powering AI. Lots of concerns about the grid's inadequacy over the next 10 years. And Mark, I think that plays directly into what you're doing with farmers. Kind of a 2-part question. One, when you lead with the environmental benefits of your product, but then you're installing solar panels and running Bitcoin miners with them, like how do you walk that fine line when there are so many people that look at Bitcoin mining as, you know, expensive way to spend electricity?
An energy hog.
Yeah, kind of like an energy hog.
Yeah, so that's, I think, a legitimate criticism, but we're using actually the energy intensity of Bitcoin mining to allow us to sell our renewable energy for twice the price. So where we are in Maryland, we have a rural electrical cooperative, which is our utility effectively, and they allow you to net meter up to 2 megawatts of capacity, which is a pretty decent size of a decent amount of energy. But the catch is we can only net meter twice what we consume. So, I wonder what the best way to generate electrical consumption might be. I think Bitcoin mining is a pretty good way, and we're generating some of the cleanest collateral in the world and using it through DeFi to take stables and generate working capital without giving up the upside.
I got a stable for you.
Yeah, there you go. So in fact, we're kind of turning the narrative, I believe, on Bitcoin and energy on its head and using Bitcoin mining as an enabler of the development of renewable energy assets versus a sort of suck on the overall grid. And so by doing that, I think we're really opening up the possibilities of digital currency and the environment, and then also, you know, the opportunity for the rural economy. If you think about the level of land that will be necessary for these assets to be built, and the challenges with our grid mean that having decentralized energy development all over the country means that our grid can actually be more effective, and that folks can even, you know, provide their own power behind the grid. Basically divorce their power company, and in our case, you know, we're basically creating a power company brick by brick.
Hang on, interesting that you mentioned like decentralization of power generation. I think about that a lot. One of the challenges with power and electricity specifically is that it is not infinitely fungible, meaning that if you generate electricity in California, you can't use it in Texas, both because of regulation, but also just the physics don't work. And so what we end up seeing, as I'm learning more and more about this industry, is that there's like small centers of decentralization opportunity for these different types of power being generated. And so specifically with the use cases you're thinking about with like farmland use cases, or taking what's available to be harnessed via solar specifically, maybe wind as well, or other renewables via farmland, it does seem like you can almost create smaller decentralized pods almost of where electricity can be used, shared, funneled. Does that make sense? That's something that you're working on?
Exactly, and it's incredibly powerful. So if you are, and I think AI has really exposed this, that if you're a a county in the United States looking to attract investment in these high-tech areas, you better have available electricity. And so if you can spur the development of that in these more rural, out-of-the-way places, you're basically creating the foundation for economic development in that particular area. And, all of these different, all of these different interconnection or the transmission, they're basically sort of islands that operate very independently. And so it lends itself to both producing your own power behind the meter, but also developing these decentralized assets that can contribute to these islands to make them more functional.
I'm going to hop back in, John. Sorry. But Mark, you mentioned like AI data centers behind the grid or behind the meter power. That's one of the things that kind of spurred us at Power Finance to do what we're doing. Meta recently announced that they are spending $29 billion to build the power plant to then back the data center. So that's not $29 billion on the data center. That's $29 billion on the power plant itself. And so what Meta is doing, they're Meta. So they can effectively say, I am willing to spend $29 billion and lock in my energy production for a long period of time. For most kind of smaller but still institutional level size entities, they do what's called a PPA, power purchase agreement, where they're going to lock in for 10 years the cost of electricity. And this is kind of those monolithic sized transactions that I think are going to go away, especially with AI, and you mentioned AI. Right now, so again, Meta is building its own power plant. There's a lot of these like 10-year locked up fixed contracts for power. Yet as AI becomes more and more efficient, as we use it more and more often, you're going to see there's not only a massive increase in the demand for electricity in general, the type of demand is changing. Rather than being locked into a long-term contract for 24-hour-a-day power, these AI agents that we're all going to be using more and more are going to have individual transactions where they're working for us. And these AI, these efficient-seeking AI agents are going to say, I don't want to necessarily pay a certain amount of dollars per hour of power if I'm not using it. I want to pay on an almost transactional basis, maybe hourly, maybe daily. But this goes back to our operating thesis that the size of transactions in electricity are going to be getting smaller and smaller. And these payments are going to be happening more and more. You're going to need a stablecoin that makes these payments because no one's going to trust to give my AI agent access to my bank account. And so this kind of ties into the thesis that we've got, whereby the power generation the demand for power is going to start getting fractionalized and decimalized, and we're here trying to make some of the transaction layer that supports that.
I think that makes sense. Do you see, Steve, there being a renewable energy power token that trades at a premium to a dirty power token? Do you think that we're going to get multiple types of power tokens in the distant future?
I think you're right, John. I think ultimately there will be value placed on cleaner energy. People are willing to pay up for it. People will pay less for dirty energy, if that's the right term. And so I think there will be multiple tokens out there. I think you'll be able to trade them. Maybe you as an industrial user have to use coal power because you're in Kentucky and there's nothing else around. And if you so choose to somehow offset that, you'll be able to buy, invest, trade something with some renewable or cleaner energy tokens to help offset. And that ties into some of the carbon trading that, I feel like carbon trading to me has been around for quite some time. I know there's a viable market for it. It's not huge. I think that there's an opportunity to help make that carbon trading or that offset market larger. Yes?
I wanted to actually ask Mark about carbon credits. You talked a lot about solar, people making money selling power, Bitcoin, people making money mining Bitcoin. When you're using carbon credits as your income stream, and as a follow-up on that question, when you're working with a farm, how hands-on are you getting? Does your company set up Bitcoin miners and solar panels? And
so to answer that second question, we get our hands very dirty. I'm out there literally tackling sheep to vaccinate them. So this is this is a full contact sport. We're building our own renewable energy. We are doing our own farming. We own the land. So we own every step of this asset, and that's really what we believe. It's a hell of a lot easier innovating when you own the land and you don't have to ask someone their permission. And that's really, what I think I've learned from some of my last endeavors, that usually can take forever trying to convince a farmer this and that and the other. If I can just buy the land and do it, I can move a lot faster and do a lot more important things. So that's the first part of the second part of the question. I'm sorry, the carbon markets. So we're doing two sort of enterprising things in the carbon space. So if you look at the carbon market right now is mostly a voluntary market. There is a compliance market that's developing in Europe that's regulated. But in the United States, generally the largest buyers of CDRs, and these are carbon dioxide removal certificates, not certificates that you would sell for doing something more efficiently. It's actually sequestering carbon, so removing it from the environment for thousands of years, okay? So we're basically taking wood chips, so a waste of the wood of the forestry process. We're heating them to 700 degrees in a pyrolysis reactor, and we're generating above 90% carbon soil amendment, which is incredible for agricultural productivity, also for water management because of its surface area. So when it's a drought, it's maintaining water. When it is a flood, it's soaking up water and making sure that your topsoil is not running off. And as a result, you end up using a lot less fossil fuel-based fertilizers. So we're selling those carbon credits. The biggest buyer right now is Microsoft by a order of magnitude, but Google, Shopify, Oracle, those are the biggest buyers in this market. We expect that this will become a compliance market eventually, just given the way the world is going. But right now, it is a voluntary market, and producing credits that are verifiable, that you could actually go in. We have a process where how much carbon is in that wood chip when it goes in, and you can measure how much carbon is in that wood, the biochar when it comes out. So it's we can provide corporates who are looking to basically, the idea of getting to carbon neutral. I worked for the team at Clorox, like trying to think about that. Like they were so far away from actually truly figuring it out, and they've made some very large commitments by 2050. So how the hell do you actually do that? You're gonna need carbon removal. You can't efficiency your way to that. And so I believe that market is, as we get closer and closer to the day of reckoning where people have, committed to being carbon neutral, this market is really going to see a flourishing of demand, and we're going to be right there with some really high quality carbon credits to sell.
I wanted to ask you a little bit more about the farmer's experience. Are they using the dry heat? Are they drying tobacco, or is this a use that you're seeing, lumber?
So in our case, we are the farmer, and what we're doing on our biochar facility, obviously when we heat something to 700 degrees Celsius, there's a lot of waste heat that's generated. So on one of our pyrolysis reactors, we have 5 megawatts of waste heat. So what we're doing is we're harvesting that waste heat through an organic rake and cycle process, generating steam, driving a turbine, and generating baseload power. So that 5 megawatts, it's pretty inefficient, but that 5 megawatts of waste heat is turning into half a megawatt of baseload power, which is pretty significant. So if you add half a megawatt of baseload power together with the 5 megawatts of intermittent power, together with battery storage, we really have a very interesting ecosystem behind the grid, and the ability to sort of commercialize it in the most profitable way. To me, that's kind of the future of how all of this comes together, just taking each of the different byproducts of the processes that we're engaging it with, and then trying to work synergistically such that it increases the IRRs of our investment.
On the topic of IRRs of your investment, are the landowners coming out of pocket typically for the installs? Are you arranging financing? Is this part of the secret sauce that gets the process going? Can you speak to that?
Yeah, so I mean, we are the landowner, we are the farmer, we are buying these properties, we're not leasing them from somebody else, but we do believe that once we're able to lock in this business model, that we need to give back, and so the idea is that we would establish a 501c3 alongside, such that we could provide pro forma business models that people could use to take a look at how they would implement this on their particular farm. We would provide them with strategies so they could localize and adopt some of the ideas that we're kind of guinea pigging for people. In a way that would make sense for their, their situation and their local reality, and give back honestly, such that we could have others implement this strategy in a way that makes sense for their particular farm and their community.
It's almost like a franchising opportunity.
I like that. Yeah, the business model franchising.
Franchise for good.
Well, that's great. And so if you're acquiring land and doing installs, you must be raising money all the time. So can you talk to the group about that? How they can participate in this positive movement?
Thank you. So we actually have a convertible note that we're offering on an entity called Vicinity Capital. It's a Reg CF platform. Anybody with $2,500 is able to invest, which is really cool. You don't have to be an accredited investor. Are part of some sort of angel syndicate, and so look it up. If you find me on LinkedIn, there's a link there, and we'd love to have you support our mission and be part of the upside that we're creating. So thank you for asking.
It sounds like a wonderful cause. Steve, I guess I want to ask you kind of the same question about investing in power finance.
Yeah, let me.
Before you answer, though.
Yeah.
I thought we already learned once that DeFi, dangerous. We got our heads handed to us in 2019 by regulators. Is this a new type of DeFi where we're going to not be murdered?
I think that regulators have certainly come around. I was fortunate to attend the SALT Symposium out in Wyoming not that long ago, and the fact that we had SEC Chair Atkins speaking, 4 senators, 5 representatives there. I think the world is changing for the better and makes it more open for this industry. And tell you what, rather than mention anything about the fundraising that my firm's doing, we're doing a seed round, it's going pretty well. I actually want to take this chance to ask the audience something, because this is the survey that I really need answered. So if you had the opportunity and availability in a permissionless way in your wallet to be able to either speculate on the price of electricity because you think a storm's coming to Texas, or if you want to hedge some electricity costs because you know that you're about to light up a couple of Bitcoin miners you're going to have online for the next couple of years, is that something that's appealing to either hedge or speculate on via a token that is just in DeFi? There you go. I'll take a couple yeses. Awesome. That's what I need to know. Thanks.
Derivatives are moving on-chain this year. It seems to be a huge movement. Power trading derivatives, I suspect, will be similar. Maybe if we're not going to be squashed by regulators, this is the year where Wall Street has to get their checkbook out and start to buy up on-chain companies. I hope that's how that goes for you. I want to thank you guys both very much. Unless there's any other questions you wanted to get for our panelists before they get off the stage. Here's one.
Yell it out, I'll repeat it.
You gave the survey and you talked a lot about how regular users of electricity or even retail investors can start to hedge or trade their future electricity costs. You mentioned the index that you're creating as well, but are there any other interfaces that you have envisioned that make it easy for people who may not be too plugged into the energy industry or really that familiar with derivatives or investing in general to still take the advantages and benefits of that without being an expert?
Yeah, so what are the type of products, just repeating the question, if I can surmise, what are some of the products that could be or should be built out there such that a retail user of electricity in their home can easily and simply find a way to either hedge their known future costs or maybe speculate? Did I get that question essentially right? Yeah, awesome. So for us, I expect there'll be a whole bunch of products coming online here. I think I'm going to be the first to bring a bunch of electricity products on chain, but I'm not going to be the last. For us, we think that there's the index if individuals want to trade and speculate and or hedge on their own. We've got our own asset management kind of ETF-like product that's just a index. Sorry, that's the first one, the index. Separately, we do have a managed pool of electricity volatility. We happen to think that issuing that not just as tokenized shares in a fund, but actually issuing that in the form of a stablecoin has a lot more uses in the world of DeFi. Once you can create a synthetic dollar that maintains price stability and gets liquidity, these are lessons I learned from my time at Circle, then you can plug into the DeFi ecosystem. And that's when things get real interesting, when you're part of Pendle, when you're part of Aave, when you're part of Compound. And so you raise a good question. Will there be more and easier use cases? There will. Do I have specific plans for them yet? I don't. I got to stay laser focused on getting my things to market.
Yeah, and just to answer your question, I mean, one of the things that's happening and what we're tapping into is this movement called community solar. And like, for example, in Maryland, there's legislation that allows people to, through their utility bill, basically buy completely, displace all of their energy utilization and pay through a virtual power plant for, you know, like say our power if we were to sell renewable energy through that particular utility. So in that way, you can actually make sure that the energy that you're consuming is green, and then you are, in a sense, an investor in that energy asset, so you are getting some of the renewable energy credits back. So you're actually gaining income from your piece of that particular energy asset through a community solar program. So that's a very tangible way that a consumer can participate in this movement. And you know, obviously, as we digitize all of this and we make it more accessible, it becomes, you know, even more powerful.
There's some great content, guys. Thank you so much. Thank you, everybody, for sticking around.
Hey, thanks to Boston
Thank you.
Blockchain Week. Thanks for the text. Thank you to Ian Kane, wherever he may be. Great event.